You are listening to ChartingWealth.com for Tuesday, the 26th of May, 2015. Remember, Monday is Memorial Day. The markets are closed. Let's see what's been going on. This is IYY, Total Market Index Fund. It tracks the whole stock market. Now, what we see with these candles, each represents a 2-day period in the stock market. This is the last candle ending on Friday before the holiday. You can see we have significant movement up from somewhere around about, let's see, that's to 106, something like that, 106, right at 106, all the way up to 107.61. Now, you can see over those 4 days, there's pretty significant up movement. We've got a good 2-day trend line that's been drawn. We have a crossover going up back on the 14th of May. On our MACD, that is the moving average convergence divergence. That's what that means. The red line is the exponential moving average of an 8-period moving average, and that is basically our signal line. So when it's crossed by the blue MACD line going up, it tells us we have significant movement in the prices and acceleration to go up. The derivative oscillator is a little different. Its calculation is different. Both the MACD and the derivative oscillator are both oscillators. And what we see is the derivative oscillator crossed over back a little later on the 20th going up. But again, we like it when they both cross at the same time. That typically I have found, like when you see it crossing over here about the same time, it really just gives you a better feel that the movement is actually going to be a little more sustained. And of course, what did we see? Well, we saw this move up, a little bit of a drop back there. But again, I'm looking at an earlier part of the chart, doing what we call backtracking. We have a great teaching on that. I would encourage you to go to chartingwealth.com and follow the teaching that we have on backtracking. You can search everything that's at our website. So let's talk about what's going on. Crossover going up on the 14th. That's when we actually started drawing our 2-day trend line. It has not been broken yet. Derivative oscillators in the positive. Now let's revert back quickly to the 4-hour chart. And what do we see? Well, we see a lot of sideways movement. Looks like the MACD is trying its best to get crossed over going down. It has not done that yet, and it's not broken the 2-day trend line. So we're technically in an up movement for the total market. We can see the derivative oscillator is moving down. And if you see the 4-hour chart crossover going down on both of those at the same time as it breaks through the moving linear regression lines, the 30 and the 34 period, and if it at the same time crosses through the 2-day trend line, I'd pay a lot of attention to that. Okay, let's now go back to the 2-day chart, and we're going to switch over to the SPY. What is that? Well, that is another exchange-traded fund. SPY represents the Standard & Poor 500, those big companies that make up the S&P report. Now we see, again, 4 days, very similar to the IYY, crossed over a little earlier, back around the 13th, moving up. Again, crossover on the derivative oscillator, and we are continuing to move up. We have a nice, good 2-day trend line. Let's break over from the 2-day to the 4-hour chart. That 2-day trend line stays there. One of the nice things about freestockcharts.com, and again, if you don't have our layout, all you got to do is sign up for our newsletter at chartingwealth.com. We'll send you the layout that we're using right here for free, and it's on freestockcharts.com. Isn't that a great deal? We have the moving average convergence divergence attempting to cross over. Not quite yet. The derivative oscillator losing some speed. And we also see on the 4-hour chart, again, sort of that sideways movement breaking through the moving linear regression lines, moving toward the 2-day trend line. So is the S&P getting ready to cross over on the 4-day chart? Maybe. But here's something very interesting. If you read like I do, and I try to open it up every single day, the Stock Trader's Almanac for 2015, available from Wiley Publications, written, of course, by Jeffrey and Yale Hirsch. It has a lot of great stuff in it. If you bother to look at what happens on Tuesday, what's happened the last 20 of the 28 past Tuesdays, there has been an up movement on the day after Memorial Day for the Dow. That's something to keep in mind because it looks like the market's getting ready to cross over going down. The S&P is, but when you realize the Dow, 20 of the last 28 Memorial Days, day after Memorial Day, it's moved up. Something to pay attention to. It could happen. It might not happen. But that's what I love so much about the Stock Trader's Almanac. It gives you all sorts of interesting information to pay attention to and to help you chart. Now we're going to go from SPY to the Qs, and we're going to go the Qs or the cubes is the NASDAQ 100. We're tracking it. Now it gives you a lot better movement. If you look, we don't have a red candle for our ending candle on the 22nd. We actually have a green candle going up. We have a crossover between the 14th and the 18th, right at the end of the prior week. We have a crossover going up, and that's continued to track. We have a green, actually it turned green today. The derivative oscillator means it's moving up. And we continue to have a nice solid green arrows moving up on the 2-day chart, which is 4 4-hour charts, 4 half-day charts. So we're now going to look back at the half-day chart, the 4-hour chart, and we continue to see up movement. The derivative oscillator lost a little bit of speed today. There's a little bit of converging, coming together of the MACD signal line and the MACD itself. So again, we are though still in an up movement clearly on the Qs, the NASDAQ 100 on both the 4-hour and the 2-day chart. Lastly, what are we going to look at? Well, we're going to go back to the 2-day chart and we're going to look at gold. We've been paying attention to gold. Gold technically on the day was down 0.08%, okay? Not even a percent. And you can see the red candle going down. The 2-day trend line was broken 4 days ago. Still have, though, on the derivative oscillator, positive, and the MACD is positive. In fact, the MACD on gold has been positive since the 25th of April, and it continues to move up. What am I saying? 25th of March, not April, March. So it has continued to move up, 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 and it went sideways for quite a while, and then it broke out back on the 14th on the 2-day chart. And we see that it is moving down, but it has not technically, as far as the MACD and the derivative oscillator goes, it's still in an uptrend on the 2-day chart. Now let's check out the 4-hour chart and see where gold is. Well, gold crossed over going down on the 4-hour chart back midday on the 19th. The derivative oscillator crossed over at the same time, and it broke through the 2-day trend line. Now, that gives you a lot of evidence of a down move in gold. When you see all of these things occur on the 4-hour chart at the same time, it shows you that that down movement is pretty significant. Now, what will gold do? Well, gold is interesting. It is so controlled in so many ways. If we look at it, we can see, though, that this down movement's totally contained within the 2-day candle back on the 18th. Gold is technically in an up move on the 2-day chart, crossed over going down, but not yet confirmed on the 2-day chart by the half-day chart. So we would technically say gold is still in an uptrend, even though there's a lot of evidence that it may be starting to move in a downtrend. If you see the black horizontal line that I've drawn here, that is a line that we've seen before when we backtracked as being a place of resistance. It broke through that resistance, but then came back down to it and has now moved under it. Something to pay attention to. We also drew a floor here that has been a floor some for gold in the past, and that's on the weekly chart actually is where we came up with these. So something to pay attention to. Technically gold is in an up move. It is not crossed over going down on the 2-day chart, but that may be happening. You need to pay attention to that this next week if you indeed are in gold. So we hope that this has been helpful to you as the week starts. Again, remember, the day after Memorial Day, according to the Hirsch father and son in the Stock Trader's Almanac, has been down 20 of the last 18 days after Memorial Day. So pay attention to that. maybe a good up day starting the market on Tuesday. Thank you so much for listening. Hope you had a great Memorial Day weekend, and we wish you the best in your trading and investing this week.